This conference will now be recorded.
Good afternoon, everybody. This is Greg Morton. It is Saturday, October 8th, 2022. And then this is the weekend video update for Canslim growth stock investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, for educational purposes only, not recommended any stocks or securities to buy or sell, and all investing has substantial risk of big losses. We want to learn first and only then invest. So our topics for this weekend, we'll look at the Impactor like we always do. We'll look at what do we see this past week? Was it constructive action or destructive action? And the hint is market was slammed once again by over 15 Fed inflation is all that matters, speakers, as well as good data coming out on Friday. So we're in one of those periods where good economic data showing we're in a strong economy is bad for trying to control inflation. So the Fed speakers are just chewing up the market. We'll look at the current market review, discuss it, talk about the trading plan currently, which is a non-trading plan, and talk about our monthly educational meetings. So start with the Impactor. As Anil tells us, this is the most important letter in Canslim. When we're wrong on the M, nothing else is going to work right. So we always want to diagnose or interpret. We don't want to predict. And we use three things in this order of importance / priority. Number one, the action of leading stocks. And right now, kind of what leaders? All we have is a few stocks holding up that are struggling to stay on Survivor Island. We're looking at actions of stocks owned. It's currently none. We have no long positions in the group teaching portfolio. It's all cash except for a short position. And we'll look at market pulse, distribution day count, price and volume on the indexes, as well as the coloring book tracking. And we just had another pretty much disastrous week, wrapping up with a bad distribution day on Friday. So let's hop out of here and go over to MarketSmith. So here's the NASDAQ daily. So you can see this week sort of had one of those strong up days on Tuesday with some volume, and then just went sideways and then crashed back down on Friday. We've lost all four moving average lines again. They're all upside down in the wrong order. 10, 21, 50, 200 day. Came up into the 21 day, got knocked back down. We're back near almost 35% off. And the NASDAQ, I believe, is the only remaining index that hasn't undercut the June lows back here. And here's the peak before the bear market started, November. So we get to Thanksgiving this year, we'll be a full year into this. And of course, some people say really the bull ended in February, prior to this, so that would make it even longer. S&P 500, very similar, came up into the 21 day, crashed back below all the moving average lines, pointed down, just the indexes look the same. Same pattern, everything's moving in lockstep. It's widespread weakness. It's a bear malls all market. Same thing on the Dow. Russell, same thing, barely trying to hold the 10-day. And the S&P 600, just right there at the 10-day too. So these all just look really bad. Let's go back and look at the weekly charts on the main ones. So here's the NASDAQ. We can see setting up in a classic, at least 3 legs down bear market. Has a little bit to go to actually undercut the second leg, like I already mentioned. We're 10 months into it as of September 22nd, so we're a couple weeks past that. So 10 and a half, 10 and 3/4 months into this. S&P 500, same thing, already has a third low and can go lower in this leg. NYSE, same thing. Dow, same thing. So pretty easy to interpret where we are. We're in a downtrend. We're under the declining 250-day moving average lines. Most stocks look like this. Just really nothing constructive out there. And if we jump over to the coloring book, we really can see the weakness here. So again, capital distribution selling day on Friday. I only have 8 buying days, 16 selling days within the 25-day window. So we have twice as many selling days. So to me, it's pretty clear, still a distribution dominant tape. It is not an accumulation dominant tape. On Friday, we now have 8 distribution days on the NASDAQ, 8 on the S&P 500, and 9 on the Dow. Of course, IBD doesn't count when we're in correction, but I still keep the count going because I just want to know how bad or good the distribution count looks. The Russell's the only one that's still MMTS yellow, and it's real close to flipping back to red. Market school exposure is 0, and we have new lows back 3 days in a row, outnumbering new highs. So nothing really pretty here. We'll have more Fed speakers next week. We get the Fed minutes on Wednesday. That can sometimes be, it's not near as bad as the Fed meeting days, but can be close. Let's see, got a strategic petroleum reserve release. Supposed to end in November, I think is the date. And of course, we have an election day coming up. So let's keep an eye on that. And earnings season is kicking off. So lots of stuff on the calendar. Jump back over here. Covered that. So our true market leaders, the last 2 weekends, each weekend I've talked about the bear malls all. This weekend's just ditto. Soon as anything makes a little progress, it just seems to get clawed right back down. So if we go back to MarketSmith and sort of look at our potential true market leaders list that we were looking at, let's go to the daily. So you can see, so here's in phase, which was really holding up well, was looking strong, was fighting the market, but then the RS line came off, just plunged this week, slammed below the 50, moving average lines crossing each other. Shockwave knocked below the 50. RS line still okay. It was sort of going sideways, so maybe it can recover. Lithium, this breakout just didn't work. Maybe this is working on the whole new left side of a base. So if we can get a good looking right side of the base, maybe that one will do something. But for now, it's gotten hit. RS line's plunging down. Wolf still going a little sideways. At least this one's holding the 50. But again, RS line has flattened back out. So they're hitting it. Vertex, this is probably the best looking of the growth stock charts, or the strongest right now. So RS line still at a new high. This one's holding in there. Looks okay. And then Neurocrene came after it, tried to break out, slapped back below the breakout. And if it didn't quite close below the breakout day, but if one was in it, that can be the Mike Webster early exit rule to start selling some if you close below the low of the breakout day. So we just see, those are getting hit, showing weakness, just coming after all of them. Go down through that. So current market thoughts, things to look for. So the Fed talking heads, they're just really ganging up and putting this inflation talk out there again and again, over and over. It's all about inflation. Nothing else matters. We don't care what it does to the market. We don't care what it does to anything else. This is our sole singular focus right now. And then keep in mind that in the background, the quantitative tightening is supposed to double on the balance sheet side of things to 60 billion per month, starting in September. In September, they only did just over half of that. So that's like a 50% miss, maybe close enough for government work, sarcastically. And then we'll see what October brings. Is it going to be more trick than treat? Maybe not. Who knows? They did have a pretty big reduction the beginning of October. So we'll see cumulatively what they do for the month. So current market review, as I pointed out, all the MMTS are red, really except the Russell. Sorry, I got a typo there. Window of opportunity is closed. IBD's in correction. Distribution days are piling up. Selling days, the number of selling days are crushing the number of buy days. So it's distribution dominant tape. And then new lows each day are pretty much outweighing the new highs. And the indexes have undercut the June lows except for the NASDAQ, and everybody looks like they're working on a third leg down. So current market signs for me, same, still a train wreck, big train wreck. I don't know if that guy's saying, can you hear me now? Can you see me now? But the bear is obviously here and just wrecking the charts. Same computer wallpaper is appropriate. And again, don't feed the bears. Violators will be murdered by the bears. So seriously, do not feed the bear. Don't feed him your fiscal capital. Do not feed him your mental capital. The M's wrong. O'Neill's told us it's wrong. We can see that it's wrong. There's just no question about it. So is there any bright side in all of this? Well, yes, as the market gets worse. Well, first of all, it's not tricky right now. Sideways markets are tricky. Uptrending markets are actually easy, and seriously downtrending markets should be easy if we're disciplined. It is a clear downtrend. Our trading plan right now is easy. Just don't do it. It's the opposite of Nike, or stay away from stocks like Nike. And remember, a couple things. Often the biggest one day up or in the midst of a bear market. Don't let these trigger FOMO and drag us back in too quickly. And a lot of times these days are just dead cat bounces driven by short covering and sort of supported by the FOMO crowd. So that's what happened on Tuesday this week. It was just a one-day event. So, and that's why O'Neill said, hey, the follow-through day needs to be on day 4 or later, because that's when you know, okay, this is real accumulation, not just the dead cat short bounce covering, or there's a really good chance that it's more than just the dead cat bounce. Also, I added in here this weekend, just because I think a lot of people were doing this. I think they're asking the wrong questions. Is this the bottom is a wrong question. That's not what Canslim is trying to teach us. It's not trying to teach us to pick the bottom of the market, the top of the market. It's not trying to teach us the bottom on stocks, nor the top on the stocks. It's a trend following system. We're trying to follow it's not the middle, but the 70% meat of the trend, 75%, the meat of the trend. So it's okay to miss the bottom 10, 12%, 15% of a new bull market. And it's okay to miss the last 15% to be out. So we're not trying to pick the bottom, so we shouldn't be asking, is this the bottom? And then isn't the market too oversold? Well, it can get a lot more oversolder. The market can remain irrational longer than we can remain solvent. Aren't we due for a bounce? Okay, again, the wrong question. That's a predicting question. And why wouldn't the market bounce with everyone so negative right now? Again, the wrong question is trying to predict. So what are the right questions? 1, can I objectively identify a change in trend presenting a low risk opportunity to start getting back in? So how does one do this? So you got to study and understand the M and move in accordance with the M and the trend. And this is what basically I'm just restating what we've had in the slides the last couple weekends and just turn these into correct questions. Has there been a valid follow-through day? Yes or no? Either there has or there hasn't. It's pretty clearly laid. The rules are clear for us. There's not any wishy-washiness in the follow-through day rules. Or has the window of opportunity model opened back up? Or has the Fed pivoted? Obviously not yet, but that's a question to ask each week. Or is there a trend of new highs exceeding new lows? Now, sort of like 1 and 2 the best, and a lot of times 1 and 2 will happen fairly close together. I think that's a good sign. So we ask all these questions. Have any of these 4 things happened? And then, we have to have, do we see top-notch, fundamental, Canslim stocks set up in full and proper basis and breaking out? Or experienced investors, once we've got a trigger up here, may take an early entry in nearly a full base that gives you a proper early alternative low risk entry per your rules. And you may be reducing position size a little bit, particularly if a couple of these things have not happened yet. And remember, the Fed is like a pendulum or wrecking ball. They always go too far in both directions, and its predictions are already off. Remember, this inflation is just transitory. So this week, what did a Fed governor say? We're facing runaway inflation. So it's just like, so it's sort of the exact same thing. Transitory was one extreme, and runaway inflation is the other extreme in their language. So it's a great time to continue to study and read. A lot of good books out there, to stay in touch with the market regularly, and to always, always, always do your chart work every weekend to prepare a watch list. No matter how bad it feels, no matter how much you think you're wasting your effort, staying in touch with the M will have you prepared when the new uptrend comes. So you'll be ready for it. You'll be ready in those first 5 to 10 trading days to catch some of the best of the best. And then one more positive thought, the worse it gets to the downside, the better it will be to the upside when it gets here. So the big runs after the 3-year 2000.com crash, the lengthy financial crisis that ended in March of 2009, great runs, great opportunities after those. EPS season is here. Also, there may be viable gap ups if the M improves. I mean, this week, Aehr had a very nice reaction to earnings, and I just had to pass. That would have been, let's just look at it on the chart so you can see what I'm talking about. So this was great. Nice sloping trend line entry within this base. Look at that volume, massive, massive. That's just beautiful. RS line screams higher, 350% earnings, 89% sales. Let me put it down here, even though it doesn't go on this list. Liquid enough, only 25 million, so it's a little bit on the thinner side. Doesn't have any top-rated funds in it, but again, if the market had clearly been in an uptrend, that was a perfect entry to start building a position in this stock. Just really good numbers. Look at the weekly chart. Yep, same thing. You can see it set up there. You can draw the trend line in that chart. Numbers look good. Return on equity strong. Pre-tax margin strong. I mean, those add up to almost 60. Just lots of good things. Zero debt, so they're not going to hit by interest rate increasing. So again, other than being toward the thinner side, this one's strong, would have been worth an entry, but the M had to stay away, couldn't do anything. So monthly online meetings, our next big monthly educational meeting will be Tuesday, October 18th. You register at the Stockyard Meetup site. The monthly tuition is $12. You can attend live if you want to, all or part, doesn't matter. Everybody gets the recording, slide deck, links to any webinars, articles, or things that come up during the meeting. And first time it registers or attendees will get a courtesy copy of the prior month's meeting materials. So here's what we covered back in September. I've mentioned these before, did a lot of little mini educational reminders. I think I'm going to follow this same format this coming month. We'll go back and look at the SPAC short candidate we looked at last month, talk about the group teaching portfolio for sure, talk about the IPO market. So we'll just continue looking at those. Again, great time to study and learn. If you don't have a set of written sell rules, I taught that over 3 months here in January, February, and March. So these can be ordered. You'll have your own written sell rules if you'll work through these and do what we cover in those. The past ones are $15 each. You can email me about those. Also, I've done ones on having a complete weekend routine. So here's all the contact information. The meetup sites are Greenville Eastside IBD meetup. That's the one I run with IBD. Stockyard meetup site is the one I run just for signing up for the monthly meetings. You can email me about ordering prior webinars, follow me on Twitter, and of course you're on my Stockyard YouTube page. So there's a lot on there besides these weekend videos. So that's it. Hope everybody has a great weekend routine, and I'm out of here.